Well, now it's the time for the thriving middle class in the audience to put their questions to Martin. Now, we have 2 roving microphones, and the people who hold them will be choosing who gets to ask questions in sequence. Can you please, when you ask a question, could you please state your name, affiliation, if any, and keep the question as short as possible, please?
Thank you, first of all. I'm particularly grateful that you introduced the idea...
Can you hold the microphone closer to...
Thank you. I'm particularly grateful you introduced the idea of the great man or woman in history. Very unfashionable among historians these days. But to have great men or women, like Keynes, you need that growth factor around them, that freedom, that middle class. And your last question started to answer my question. How do you recreate that middle order? Not the old-fashioned self-entitled middle class, but a middle ground of prosperity of small businesses that looked a bit more, perhaps like 1890s England or Germany, that broader spread, and make sure it's open as well to anyone who can rise into it.
Okay, Martin.
That sort of... I've got 2 huge chapters. How do you summarize it? Well, I think there are many aspects to that. One needs, well, what are the obvious things? You need an education system and you need to put quite a bit of resources into it, which effectively gives everybody a chance of the education that will allow them to do relatively rewarding and sophisticated work and understand the polity in which they are. I think I've become quite keen on the idea of restoring civics. Second, you need institutions that promote, that really make it easier for people to start businesses and start productive businesses. That's an aspect of the old Thatcher ideology I rather like. And we've really become very bad at this. We haven't, I mean, if you think of venture capital businesses, the willingness of our great stores of capital, the pension funds, to take risks and invest, there's nothing there. There's no really dynamic public-private partnerships. There are some good things going on with universities, but that's not going to be, enough. You need to create a lot of dynamic businesses which are generating good new jobs, and to that you need a lot of dynamic businesses. In the British case, America has different problems with this. The really remarkable thing is if you look at our bigger businesses, they're all fantastically old. I mean, to be very, very blunt, the FTSE, which is the representative of our major industry, it looks like a business morgue. And so why is that not happening? And that has to be part of what we would think about if you wanted to develop a growth strategy. There obviously has to be, as I said, much more public investment, better infrastructure and all the rest of it. But I believe increasingly that we have to think of whether we can create development agencies which will support the decentralization agenda of what's called leveling up. I think that is something we should experiment with. The Germans, after the war and thereafter, had some really remarkable institutions, particularly KfW, the Kreditanstalt für Wiederaufbau, which did a rather remarkable job. So you have to take some gambles of this kind. You have to make people believe things can change. I've talked about the housing market. That building things is really important. And people are incredibly depressed, of course, about the expense of housing and so forth, which is also an obstacle to people moving and moving to jobs. So I think it has to be quite holistic. Quite a lot of things have to happen to make people feel greater optimism about the future, which once that happens, begins to become circular. And here, of course, I think there's a little disagreement perhaps, but I think we're going to have to undo quite a bit of Brexit.
Another question? The microphone holders are meant to choose.
Where are the microphones? Can you give it to this person here?
Okay.
Oh, somebody got
Okay.
one?
Yeah.
Okay.
Yeah. It's Wenbin from King's College London. So my question is, how do you envision the application of distributed technology and artificial intelligence probably in the future of economic policy making? For example, in a blockchain enabled central bank, and using maybe AI to optimize the efficiency or the accuracy of the economic policy. Thank you.
So the question was about blockchain-enabled central banks. Yes? Was that part of it? And AI. I think this is a question for Mervyn. I am deeply skeptical of well, we must be careful. I think the cryptocurrency thing is mostly nonsense. The Bitcoin, irrelevant economically. People tell me blockchain is an important technology, particularly for record preservation and record keeping on a distributed basis. I have no views on that at all, may well be true. But most of the discussion about central banking is, I'm not sure whether this is where you're going, is about central bank digital currencies. Now, I actually am wildly enthusiastic about central bank digital currencies, probably for a reason that Mervyn will definitely not agree with, which is I want them to substitute for bank deposits. And if they do, then banking would actually have to do something useful rather than create money and blow up the economy from time to time, namely actually become an intermediary, which is not what most of what they do. What they basically do is create money to finance property transactions, which is quite problematic. But I'm not going to go into that. What do you think about central bank digital currencies?
So the question about them is, what is the problem to which they are meant to be an answer? And the first thing to say about a central bank digital currency is that it's not a currency. If the Federal Reserve were to issue one, it would be in dollars.
Yeah, of course.
We have dollars.
Of course.
Ditto with the euro area, ditto with sterling. It's all about payments.
It's a payment mechanism.
It's a question of what's the right mechanism for making payments. Now, when people hear about CBDCs, the word that excites them is not central banks, because that's pretty boring. It's digital. That's what gets them going. And the trouble with that is that you need to have a good argument about why there is a problem at present. Most of the transactions we make today are already digital, whether it's your card that you swipe on a machine, or whether it's going on your computer and making a payment to someone else, it will happen digitally. And the question is, what's wrong with that? Why is that at risk? And I think there's no good answer. People haven't come up with a good explanation of why they want to change that. Because digital is so exciting, they think we must be at the forefront of it. This is the government policy. We're supposed to be at the forefront of it. But when the lemmings are going over the cliff, you'd think some of them would have said at one point, you know, maybe this wasn't the wave that we should have been in the forefront of. This was one of the ones we should have stayed near at the back, which is where the Federal Reserve is today. Now, you could certainly try and make the payment system more competitive, more efficient, but it'd be an odd thing to do to have a state monopoly as a way of improving competition. Cross-border payments are clearly problematic because they're very expensive. Much of that is because of regulation. It's not at all, it doesn't follow that each individual central bank around the world creating its own digital currency would solve any problems in cross-border payments. That's got to be a system which links central banks together. That could be done without any of them having a digital currency. I think the answer to it is whether you want to use a central bank as the mainstay of the payment system will vary from country to country. We've got one of the most efficient and developed commercial bank payment systems. And one of the things I worry about is that, you know, if you said, well, all retail customers will be able to have an account with the Bank of England, well, the Bank of England is totally incapable of having 50 million customers. We struggle with a few dozen, let alone 50 million. And the idea that poor Andrew Bailey is going to be sitting at his desk answering calls from Mrs. Jones in Wrexham saying she can't log on to her account. So it's a massive operation to provide bank accounts to every citizen. I don't see at present that the idea of trying to create a retail central bank currency has a lot of mileage, except in countries where their own banking system is not capable of providing an efficient method of making payments. But ours is, because you can do it digitally already. And as for a wholesale one, we've already got that. QE is essentially the operation of a wholesale central bank digital currency, because the commercial banks have bank accounts with the Bank of England. And to my mind, the big question in this, which is not to do with digital currencies, it's a big question about the stability of the financial system, is which institutions that work as financial intermediaries should the central bank be prepared to supply liquidity to if they run short of liquidity. And we shouldn't leave it to a crisis to decide how much money we may need to lend them. There needs to be a proper regulatory framework under which the central bank will say you can issue short-term liabilities or deposits up to a certain point, but not beyond that point. And if you're willing to do it up to that point and not beyond, then we'll be willing to lend you the cash just like that at the drop of a hat, which was the case back in the 19th century before banks became too complicated. So the real issue, I think, well, there's a lot to be said about it, is about the structure of our banking and financial system. And there are plenty of opportunities for changing that. But I don't think it's a digital currency issue as such. And indeed, the bank and the Treasury have launched a consultation on all this, but they haven't actually reported on anything, and they haven't actually produced any good arguments yet that suggest there's a specific need and role for that. So it's a classic case where all central banks are rushing to say, we're in the forefront of this and we're working on it. Lots of people dedicated to it. We're going to issue reports. But they haven't actually worked out why they're doing it.
Well, I'm more in favor than Mervyn, but this is a rather technical discussion, taking us a long way from the subject. So perhaps we should move on.
Another question. Another microphone to another questioner, please.
Hello, Tim Sumner, thank you very much for the evening so far. I was going to ask you the question of how you felt, Martin, about the balance between private ownership and public ownership, and whether or not the increasing trend of private equity meant that the general voters and the people in the population are disenfranchised, or increasingly disenfranchised in our economy. And then I thought, well, that's a bit of a mouthful. So I was wondering if perhaps a simpler way of phrasing the question might be, do you think that the profit motive as the overriding motive in any capitalist system, and you talk about capitalism being protean in the sense that it can match the political framework within which it's working, do you think possibly that's one of the root causes why we're starting to go a bit wrong and people are feeling generally disenfranchised and voting like platonic Democrats for both faiths, etc.?
So if I understand, when you started, when you said private and public, I thought and you referred to private equity,
no,
I think.
Sorry, I'm talking about public.
I thought you meant public as in the public markets, by which you mean the stock exchange, tradable, and all the rest of it, as opposed to taken over by private equity. But the end of your question seemed to be about public in the state sense, right? As opposed to the private, as is to being non-state.
I started with, I'm being confused. I started, it's the first question really, that's the first one. So it's the public as opposed to private ownership in the sense of public companies as opposed to the private equity companies, which tend to be driven entirely by profit.
Yeah, well, I think of private equity as a leverage play on the tax system. I mean, it's very controversial in the literature whether they do much to improve the performance of companies. But if they're reasonably successful speculators, given the immense fiscal bias in our tax systems towards debt, since we subsidize debt in the tax system and not equity, which strikes me as mad. And I'm not the only economist who takes that view. I think you probably take the same view. The result is that private equity is a very profitable way of owning a company because you've loaded it up with debt. Most of the time that will work. When it doesn't, you get a sudden bankruptcy in this particular bit of your business, but it's all separated from the rest, and the creditors lose money. The creditors write it off. They're public entities themselves, banks and so forth, and move on. So but the people who clearly lose are the taxpayers, because interest is all tax deductible, and it makes businesses more fragile, because if you do get a big crisis, financial crisis, and suddenly the government comes along, interest rates quadruple for whatever reason, it would be a the inflation sort of thing we've seen, suddenly interest rates explode upwards, then a lot of these businesses will go bust, and we're going to have a bankruptcy overload. So my view is, for this problem, what we need to do, the most immediate thing to do, is to deal with the incentive of the for generating debt in our system, and that can be done either by making equity tax deductible, or, since we want revenue, by making interest non-deductible. And everybody has known for about 40 years that there are better tax systems which don't have this characteristic, and I think you wrote one of the books on this, didn't you?
Yes.
In Kay and King, classic work on the British tax system. So I do discuss some of these. Our tax system is a complete mess from top to bottom, and one of the things a sensible government would do is try and sort out the worst aspects of it, and this very strong incentive in our systems, all our systems, to generate debt, with the instability that creates, particularly by generating and then maximizing the consequences of crises, is very, very damaging. And I've been arguing for a long time that we should change this, but of course there are lots and lots of very powerful vested interests on the other side, and so it's not going to happen.
I think I agree with all of that. Interestingly, the last time we had any major tax reform and a clear look at the underlying nature of the tax system was the late 80s with Nigel Lawson. And he wanted to move towards a much more neutral system in respect of different ways of financing things. So the idea that we've subsidized one kind of finance rather than another is disastrous, because with financial transactions, you can keep going round and round the circle. And there's an almost infinite amount of money that you can make by exploiting tax differences in financial transactions as opposed to real transactions. And I remember, I won't say who it was, but I did try to persuade one Chancellor of the Exchequer basically just to go away for 2 weeks and take a team of people with them and say, look, think deeply about the structure of the tax system, how it can be reformed. If you want to set up a group for 12 months to do it, do that. Come back, make a speech, set the agenda, and this will be the agenda for tax reform for the next 5 years. And the answer why that could not be done, this goes back to your point on the media, was that I cannot disappear for 2 weeks because the media will be asking for comments, statements every day. And I said, well, that doesn't matter. And he said, but the opposition will be there the whole time. And I said, that doesn't matter either, because they'll run out of things to say unless you keep commenting on it, in which case they'll be replying to that comment. And this inability to take a long-term view is absolutely endemic to our politics now. It's precisely why if you come from Mars and look at the two major parties' manifestos for the next general election, you'd think they're pretty much identical. The politics aren't, clearly it's pretty abrasive, but what you won't get is people going away, taking a genuinely long-term view, because they feel they can't. They've got to keep coming out with comments all the time, and this makes absolutely no sense. We need to go back to a time when the day after a general election, the Prime Minister takes a deep breath and says, thank goodness electioneering is over for 4 years, now we can govern, and think about it carefully. But Bill Clinton was the person who started the idea that once you won the election, the very next day, you're campaigning again for the next election and doing down the opposition. and you have a grid which says this is what we're going to do on each day for the next 65 days in terms of publicity for the government, and we're going to pull the opposition into a trap. This is madness. This is a kind of game, and it does nothing to enhance or create serious policy debate.
There is one other problem, which I can state very briefly. When you've got a zero growth economy, any tax reform will create losers and winners, roughly equally matched. There's no positive sum game here, at least in the medium term, and the losers will scream. And so, one of the things we should have is capital gains on owner-occupied housing. I'm sure none of you would like that. But it would be quite a good idea.
Now we've got time for one last short question, please.
Absolutely. Rafael Libera, thank you for a fascinating conversation. I had a question going back to the initial case that was put forward, that we can both save global capitalist rule-based order, as I understand, and democracy at the same time. But if history doesn't repeat itself, but it rhymes, then aren't we in a cycle where deglobalization and strengthening of the nation states is the way to strengthen domestically democracy, and with the strengthening of democracy we can then start opening up again. So it's not that we can do it all at the same time, but we go in cycle when one is strengthened, undermines the other until the equilibrium is reached.
I think that's an interesting way of thinking about it, and that's why my motto in this book is never too much. So it's about rebalancing. I think it's obvious that we're going into a period in which the state is going to become more important and the nation state is going to become more important. That's self-evident, and that's partly because of all the international friction we've been talking about over China, the great power rival, and it's partly because of this need to restore the domestic compact. But I wrote a column about this recently, which I still think is sort of relatively sensible. The problem in the past, when we've overdone that, when we overdo the opening to the world and free markets, we get problems. It's absolutely clear. But the problem with the closure process is it has historically been associated with really massively destructive international conflict, a complete destruction of the economic system, and then a total breakdown of international relations across the board. So the great period of deglobalization in our history, in the modern world, was of course from 1914 to 1945, which was a progressive period of deglobalization and democratization, by the way. It didn't strengthen democracy. So my answer to you would be really careful what you wish for. We need to change the domestic bargain. That seems to me pretty clear. But we need to change the domestic bargain and that's a central point of my book, without blowing up the whole world. And particularly as we now have nuclear weapons, this is no longer a metaphor. So those of you interested in this sort of thing really have to be engaged in trying to manage what we do at home to deal with our very real problems while maintaining a basically orderly and integrated and cooperative world so far as we can. And I would say, as an intellectual matter, not as a political matter, which is different, it is possible to do both without blowing up either. I don't think trade was the main reason for our problems. In fact, I think it's very clear it wasn't. International finance is less clear. I'm perfectly happy to tax international finance. That will be relatively simple from my point of view. I mean, politically, not economically, by the way. But if we make this attempt to restore democracy into a war of all against all, then we're going to be in the most terrible trouble. And that's why that's a very important part of the way I argue. We have to do it through domestic policies, which are seen to be relatively neutral vis-a-vis the world as a whole. And that's aside from the big ideological and other conflict which we have talked about. We cannot repeat what we did in the early part of the 20th century, and we need to be really aware of that.
Ladies and gentlemen, it's time to draw this discussion to an end. There is one exception to the motto, be careful what you wish for. You want this book. And Martin will be signing books outside in a few minutes. Buy one for yourself, and buy several for your family and friends. It just remains for me to thank you all for coming this evening, and especially, of course, to Martin for his most illuminating and fascinating remarks. Thank you.
Very good.